I've had situations where someone's called me panicking because last night they clicked on an auction and they put $50,000 as a bid and it went hard as soon as they won the auction. And now they have 30 days to close.
You guys are looking at today's environment. Rates are starting to go down. What are you seeing?
So I think we're at a really exciting point in the industry where rates are starting to come down, but we don't have these sellers who have these 2021, 2022 expectations when it comes to cap rate.
Welcome everybody to Self-Storage Income. And the market feels like it's been thawing, and I want to talk about today what's happening, especially on the financing side, and how you guys can get money to buy a facility. But before we get into that, I have to say I'm here in North Carolina with Live Oak Bank. And the main reason I came here was so that we could talk to the king about his pet elephant. So with that, I think that's how we should start. If you guys would introduce yourselves and we could talk about the elephant in the room.
All right. Well, my name is Bishesh. I'm definitely not the king, but the elephant story is a pretty cool one. So my family is in Nepal, and they did have a resort at one time. And in that resort, they had a jungle walk with the elephant, riding the elephant so into the jungle, trying to chase some tigers and rhinos, and yeah, that was the fun stuff. But we didn't own them as pets; they were working elephants. So yeah, all good there.
You grew up though, and you had elephants.
Yeah, well, one of the businesses that my family owned had elephants. Yes.
That's awesome. Now, Anna, you've been on the podcast before. I'm sure that you probably, like me, didn't have elephants growing up.
Just golden retrievers.
There you go. Now, how long have you guys both been with Live Oak Bank?
We actually started around the same time, almost 12 years ago.
2013, I think it was, 2013. So we've been here for a while. And we both jumped into self-storage about the same time as well. So that was about 9 years ago.
Yeah.
Almost a decade.
Hard to believe.
Yeah.
Wow. There's a few reasons why, we're really excited to come out here and we wanted to talk to you guys. We also made a YouTube video you guys can check out, which is a educational one on loans and SBA and getting money. But one of the main reasons that I really wanted to come out and talk to you guys today is during this time, there is, I think, a lot of confusion on not only what's going on in the market with interest rates rising. Things kind of froze up in 23, right, and 24, and there has been a lot of talk with the change in direction from the Fed and what that means. But a lot of people, I think, are like, I can't get a loan today. There's a lot of confusion. Money and capital is not nearly as easy. And you guys are very unique because you are the largest SBA lender in the United States based upon dollar volume. And so this is something that your bank is specialized in. In fact, that's why it started out for SBA loans. But it's also unique because you guys focus on storage. And when we have worked with you guys, for all of you in our community, a lot of you have known and seen as we've gotten deals, they're working with Live Oak Bank to get loans on those deals. But we have you as a part of our community. You are actually the only sponsor that I have or have had that I don't own the company, that's not sponsored. And the reason being, and I tell people, is because your specialization within storage and how I look at you guys as more of like a partner. You understand the industry, so you help people through it, as opposed to a lot of people are very intimidated about this world. Banks seems scary. You're asking for a lot of money. And people say, well, I couldn't get a $1 million home. A bank wouldn't approve me for $1 million home, so I can't get a storage facility. And they don't even want to approach it because they also think that if a bank says no, that means all banks say no. Mm-hmm. And there's a lot of those things that are intimidating and scary for individuals, where your guys' approach is just the opposite of all of that. It is you're helping them understand in areas that they may even be new in, and you're walking them through. And that doesn't mean necessarily that you're even giving, not that you're giving people what they want or anything else, but you're actually helping them. We had one of our students looked at several deals until he found one that you guys were working with that worked out. And you guys have your fingers on the market in a way that other financiers don't, because you're seeing a part of the market that a lot of banks don't see. First and foremost, you do this in all 50 states, right?
Yes.
So you guys see, as opposed to the vast majority of storage and commercial real estate's done very localized. You're talking local banks, credit unions. They don't see outside those markets. It's principally based upon traditional financing, not even storage. In fact, those banks or financial partners, they may not even really understand the asset class or storage. Well, if you're trying to get into it, you've never done it before, and you go to a bank and they don't know what they're doing, they're going to be scared. And then there's no help for you. And so we have really enjoyed having you guys help us, both not only on the content side, educating people, but your customer service and how that is a central point for you guys. It's just unique. So I'm really grateful you guys came on. Thank you for having us out, because we're out visiting you. We've been touring your campus, which is amazing, by the way. Really just a beautiful campus. And we've been diving into a lot of these SBA loans and what's going on. So your guys' exposure to me is unprecedented when it comes to self-storage, particularly in that lower market, really what I'm saying, 5 million under, but also because you see so much. You see all the states. So it's a broad view. And that's why I'm really excited to talk to you about this. So I want to kick this off with, what are you seeing? So in the market today, what are you seeing across the board? What are trends you're seeing? And how has that played out over the last 2 years?
So actually, I'd like to take it back a little bit.
Let's do it.
I'm going to go way back to COVID.
Perfect.
All right. COVID happened, storage survived, and then storage became this nice, bright, shiny thing. 2020, 2021, 2022, there was just rampant lending to storage. Prices went sky high. Everyone was trying to get into storage. Then back end of 2022, 2023, rates started ticking up. Bank failures started happening. And then everyone just tightened their credit boxes. So all of a sudden, we had this really robust financing engine that came to a screeching halt in 2023. Let's say back end of 2022, 2023. And then the entire 2023, a lot of banks out there just had a wait and see approach. So they just stopped lending to commercial real estate, and the office kind of that whole bubble kind of played into this as well. So 2023 and actually half of 2024 has just been a complete standstill. People are trying to get financing and they can't, because banks have just stopped lending to commercial real estate. So the good thing is now the Fed's changing its policy a little bit. It's driving down the rates a little bit. So that's going to really, really help get the optimism back into kind of the lending world, as well as people who are trying to buy and transact on these self-storage facilities. So I think the outlook as we stand here right now in December of 2024, going into 2025, I think the outlook is very positive.
I totally agree. I think we've seen a shift in the market cycle, and we're seeing on our end owners, the way we're transacting, where, like you said, 23 and 24, it was standstill. I'm trying to think. I think we bought one deal in 23, which is unprecedented for us. And so then when we had some construction projects going on, and I know on it, we talked about that, you saw more construction projects. How has that played out on the construction for self-storage? Did you see a move into that? Is that still a trend, or is it shifted?
So I definitely saw the balance between construction and acquisitions move a lot closer to more construction this year. And I think it was just a nature of, interest rates and cap rates weren't quite jiving on the acquisition side. And then because a lot of banks were pencils down, we're like, hey, we love self-storage. If your project looks good, we'll finance it. And so we took a lot of really strong customers from other banks, which was kind of the unexpected blessing of this year. But recently, since we've had 75 basis points in rate cuts so far in the last couple of months, I'm seeing the shift back to seeing more acquisitions that are penciling out, people that want to move forward. I think a lot of it is just kind of buyer confidence. I think some people needed to see the rate starting to fall before they went ahead and pulled the trigger. So I think part of it is rates coming down it's easier for things to pencil, but I think some people got off the bench because they saw the rates coming down, because for so long rates were so high and just sat there that they didn't want to move too soon. So I think we're at a really exciting point in the industry where rates are starting to come down, but we don't have these sellers who have these 2021, 2022 expectations when it comes to cap rate.
Yeah, that is kind of burned off. And I think it took a year, 2 years for people to go out to market to not get their price, and then to get comps showing, even though that's not how we value, but for sellers, they needed to see comps in terms of where the values were at higher rates. And then the ones that were lower, not selling, that takes time. That is not a switch. They're like, well, this is how I was 6 months ago and I was getting those prices. You're like, yeah, but interest rates were 3 times lower. And so they're like, well, I'm still going to try. And I think that took a really long time. We were in easy money for such a long time. And then COVID just, really, really blew that up. But that pain and that contraction, right? The sidelines, like you mentioned, it was a big deal because is it going to go up? Because if it's going to go up, is it going to get worse? So it was, people were just, we're going to wait. Like, we're going to wait. Sellers are like, I don't want to do anything right now even. And that change in the signaling of the change in direction by the Fed, you're right. I think that does more for confidence even about future. It's the trend, right? It's like, no, we know that this idea of rates going up and that contraction, that money tightening, that part's over. So we know what we got, and we can reasonably assume now that it's going to get better. That does a lot in marketplaces.
And another thing I want to add is, with the rates going up, the housing market came to a standstill.
Yep.
And one of the biggest pillars of storage is the housing market.
Yeah.
So when the housing market came to a standstill, rates started dropping, vacancy started increasing. So all that didn't play well with the higher interest rates as well. So it was a double whammy of sorts. So now with the interest rates coming down, hopefully there's some fluctuations and actually transactions in the housing market that'll fuel self-storage as well. So that's going to be the outlook for 2025 at least. That's what I'm hoping for. I
agree completely with you. And it's funny. I don't think people understand how much the housing market, as far as new rentals go, it represents, some people have said, 30, 45, it represents easily half. And what I mean by that is you have some markets, especially growing markets, that it represents over half. So when you look at that kind of petering out, that hit our busy seasons. So our 2023 busy season wasn't a busy season. It was just gone, right? Yeah. And then the slow seasons then were, 2024, we saw stabilization, where all of a sudden it was, oh no, that we're going up now. We can actually raise rents. So there was that shift in occupancy in rates, not massive. It's not like it, but it did shift from going one way to another, so that you have the Fed now shifting directions in operations after this busy season, signaling a shift in localized demand and operations. Those two things, I think, have led, for people that are in it all the time, a really exciting period where like, oh, finally, this is going to change and get better. But then you got to go, okay, in these environments, how do we take advantage? So that becomes the next thing. This is why we're here with you guys in particular, because we had people that we had banked with since 2008 or something like that. And all of a sudden, when everything happened 2-3 years ago, they're literally like, oh, we're not doing risk off, storage off. And it just came from above. It was like, nope, we're making rules. And so a lot of lenders are gone that were robust in the space. But you guys weren't opportunistic, right, lenders, where it's like, oh, this is hot right now, so we'll move into it. No, this is what you guys do. And so you stood that test of time. Now, in this new cycle, what are the things that you guys are looking at for people in storage, particularly getting into it? How do they capitalize on this opportunity today and future opportunity on the banking side? Like, what are you seeing people use as far as products? What these products look like? What are terms looking like? Interest rates? Are they penciling? Really now, in the actual loan part, what are you seeing today and what is working?
So I would say I see a lot of, especially your community members, saying, I don't have something yet, but I just want to introduce myself and I want to know how can I be prepared so when I find the right facility, I can move faster. And it's great. I think it's never too soon to talk to a lender. We have office hours every other week where we talk through, like, if you don't have something yet, we'll talk about all of our lending programs, what our requirements are, things like that. So that gives a sense for them to guide their own kind of internal underwriting when they're looking at facilities. That way they can bring only the ones that like pass muster to us and they're kind of ready to go. So I'd say getting really organized around that is important. That way, when you find the right facility, you can pounce on it. Because you got to think if rates are coming down and you feel more confident to buy, there's probably 10 other people that feel the same way. Mm-hmm. So I think being organized, already having a lending relationship in place so that you can move faster, because there's so many things that we can do to help you. We've helped hundreds of people buy self-storage facilities, get into the industry. So it's nothing new for us. But I think just being prepared. Yep. And being ready when opportunity presents itself.
Well, this is a really important point because even so, when you look at what we're doing, because we bring deals right to our community and everything, we actually are working with you guys. So they're evaluating and looking at deals, and we have like an underwriting of the deals. But two, we actually passed out our documents that people say, this is how you get ready. So there are checklists and what you guys need and what they should be thinking about. So it's not like they're getting necessarily even pre-approved. That's not what we're talking about, right? But they have an understanding of what is needed, where they sit. So when they do come to you, they're ready to actually move and go through that process, which is really important.
No, the checklist is absolutely important. If you talk to the bank, they will send you a checklist, right? Even if you don't have a facility right now, we'll send you the checklist. You send us the documents that we need so we at least understand who you are and what you're capable of. So basically trying to understand what pool, what kind of facility that you can take down is important. There's not going to be a dollar amount associated with, hey, you can buy this, but there'll be a range. You can buy it from here to here based on your financials, based on your income, based on your balance sheet. So if the bank knows you, we can provide you at least a playing field of where you can play. And those are the deals that you can go find and source in the market.
Or what you need.
Yeah.
And that's a really important piece because I see people like, oh, I found a deal. Now what do I need? And I'm like, you're under contract? Yeah. And I'm like, they're like, yeah, what do I need for financing? I'm like, you could have found that out long before you went under contract, right? Yeah. Like you could have just called and asked, what am I going to need? To make this down payment, do you need investors? Do you need a key person? What are things that they need more information on? So you don't lose out on a deal for things that you could have already had resolved. And what are the biggest things that you guys see investors make a mistake when they come and they're like, I got a deal, I'm going under contract. What are the things that either they're not ready for, not prepared, that you're going, hey, we need this stuff, or you need to know this, should have talked to us a little while ago?
I feel like I see some people like, I saw it, I've done it already, it cash flows like a dream, and this is like the first time I talked to them, like, okay. And then I run the numbers and I don't see that. I say, okay, what interest rate are you using? And they're telling me something. I was like, that's a great interest rate if it was, 2021. That's not where rates are today. So I think just keeping your finger on the pulse of where rates are, because even if you would have asked me 3 months ago, like, what is your typical rate? It's going to be different. It's different today than it was 3 months ago. So making sure that your model is dynamic and you're keeping up with where interest rates are, and knowing kind of a good interest rate range based on your borrower profile, because banks don't have just set interest rates. It's going to be depending on how strong is this guarantor and how strong is this opportunity that you're finding. So underwriting to realistic rates, I think that's one thing that I see people getting tripped up on. Or they'll use a rate for if they're putting 25% down, but I can only put down 10. I was like, well, that's different. That's a whole different animal. So I think underwriting to realistic rates is important. And I think also just like being upfront with the lender too. Like sometimes you work with somebody, they sound really great on the phone, and then you get their document and they're like, listen, I'm strong, don't worry about me, whatever. And then you get your documents, you're like, oh my gosh, like this PFS, like this is not strong enough to buy a $4 million facility. So I think just being upfront, especially if there's something sticky in your past, like, somebody had like that credit card and they didn't realize that it hadn't closed. It was like 2 recent late pays, perfect credit otherwise, but the score is a little bit lower than you would expect or something like that. Like if you're upfront and tell your lender about that, it comes across so much better than if the lender then finds out on the back end is like, what is this?
Well, and two, then you can direct them and say, hey, we need to know this now, or you're not playing catch up. They can actually be proactive about what I would call maybe stains, which, by the way, this happens to everybody. I've had like hits on my credit over things we didn't even know existed. And we found out and we're like, what? That was, and it was just a mistake. And we had to go run after it and get it resolved, right? So that stuff happens. So being upfront and saying, all right, I had this in the past, whatever those things may be, you guys can work with them before they get into it. Because when you get in PSA, you're on a schedule.
Yep.
So anything that happens during that time, it's like you guys now have to overcome those. You have to understand it more. You have to write. That drags it out. The higher the chance now is that you're not going to close, the higher the chance it is that you could even get stuck with, your down payment, your money's gone hard, and that doesn't need to happen.
No, and I've had situations where someone's called me panicking because last night they clicked on an auction and they put $50,000 as a bid, as a bid, and it went hard as soon as they won the auction. And now they have 30 days to close, and they haven't told their wife about it.
Yep. Yep.
So we've had those situations, and we've had 30 days to close a deal where we don't know the borrower, we don't know the site, and it's a mad dash to the end, right? So that can be a very stressful situation there. But I mean, I usually tell people, hey, we have to underwrite the facility. We have to underwrite you as a guarantor. If you don't have the facility, let's start with you because you already have that information with you. Let the bank take a look at it. If there's anything wonky, we'll point it out. If we need to strengthen the guarantor stack, we'll ask you to do that. Once we know you, and if you're going into an acquisition, we can actually provide a letter to the seller saying that, hey, so-and-so has been working with us and we like them. We've looked at their financials. And we're willing to put this little, term sheet in there for you. So when you go into bid, you can put that term sheet in there. So that the seller knows that you're a serious party, you've dealt with the bank, and the bank likes you. And that's a big thing.
That is a big thing. And when you're looking at individual, I think, first of all, lots of people have partners. So how does that add to either complexity or, somebody's coming, they're working on it, and then they're like, oh yeah, I have 3 partners, and these 3 partners are putting up most of the money, or they're just main partners, they're general partners, they're decision making. Like, how does that add to it? And what should they be aware of? Because sometimes people will get it and literally add partners as they go along.
Yeah, we've seen that for sure. So I am always very upfront, especially if it's an SBA loan. If you're going to have a partner that has 20% or more ownership in the self-storage facility, they're going to have to provide a personal guarantee. So I'm going to need the personal tax returns, the personal financial statement, information on their background. And so the more guarantors that you add, you're adding to the complexity of the transaction. And just you need to know, while it may take you one day if you're completing the application by yourself, if you have a partner that can't find their tax return, that's going to add to the time it takes to complete the application. So there's been times where I've had to be like, I'm trying to get information out of one of the partners, and I'm saying, I'll have to be like, hey, this is your partner. I'm worried about, your timeline here. You need to get him to pony up his documents.
There is a lot of people out there that they're like, I don't want to go the SBA route because of a few reasons. And, I even had these beliefs before where I'm like, first of all, it's a gamble. I don't even know if it's going to be accepted. It's going to go to the government. They may not accept me. And then I may be locked in. I don't know, how that process works. You have that sales process, then you have the underwriters, then it's got to go to the government, right? So I think a lot of people view this is a very clunky system that is unreliable. That is true in some aspects, but not all the time. And I think this is a myth that I want to talk about the process of SBA, particularly when it comes to the approval process. We talked about the individuals, right? But now when it comes to you, how does your organization work with the government, and how does that approval process work, and what should they be expecting?
All right. So the SBA does get a bad rap, and there are reasons why. So in the self-storage side, self-storage was an ineligible business. SBA didn't deal with self-storage until, I think, 2010. And when 2010, SBA allowed, self-storage folks to go in and get these SBA loans, they started knocking out all the banks and saying, hey, get me an SBA loan. I think self-storage is eligible. And all these banks try to do these self-storage loans, taking them SBA 7A, and man, it just wrecked the whole process. The people were sitting and waiting for 6, 8, 9 months, going through the rigmarole of having banks trying to understand SBA while underwriting these things, while trying to get these approved. So the SBA does get a bad rap. Now, this is where I tell people all the time, you need to work with an SBA lender that has done SBA before. They're preferred lenders with the SBA. We have this PLP status that allows banks to underwrite these deals, process these deals, close these deals in-house without ever having to reach out to the SBA. So that alone expedites the process quite a bit. So whenever anyone is approaching a bank, if they're approaching a bank for an SBA 7A loan, they have to ask these questions. Have you done SBA loans before? Have you done self-storage loans before? Are you a PLP lender? Those are 3 questions you have to ask right off the bat.
Yeah, the PLP lender is one of, actually, to me, I'm like, that's probably the most important thing. I mean, at the end of the day, you guys are being able to prove that why it's important to me is when I go and walk in, and I'm like, I've got a deal. Here's obviously my information you need on me, but here's an information on the deal itself. There's 2 things that to me are important. And that's, first of all, that you know the product. Did you like, if I have to try to get the bank to understand what I'm doing, first of all, the perceived risk then is going to be high no matter what. And so the focus is going to go way more on me. And there's more opportunities for that to go up the chain of the bank and get to a committee. And they're like, actually, we don't think we understand this well, so done. And then they have to sell that to the government. They have to get that approved there. So to me, I'm like the failure in the process, where with you guys, it's like we look at it, you guys already know. First of all, you know storage and you know what's going to get approved. So you can look at it right out of the gate and you could say, this is what is needed. This won't be approved because we're the approval process. You shorten this time frame down to a level that I had not seen before. So what is the average duration when you guys, you get outside the individual, you have a facility, you guys are underwriting this, right? You guys are looking at it and you go, this will meet our requirements. What does the time frame on that look like?
Well, I think the most important thing is, when does the time frame start? And for me, that is when the application is complete, because I've had some people that complete the application in an hour, and I have some people I'm chasing them down for literally months, being like, can you please just send in your tax returns? So the clock starts for me when you complete the application.
Not when they sign a PSA.
No.
It's when
so
you.
Please don't sign your PSA, wait 3 weeks, and then say, oh, I need to get a loan. So once the application is complete, for us, I can easily close a loan 45 to 60 days for an acquisition after the application is complete. But in terms of like when you're officially approved, so you have some confidence before your due diligence money goes hard, I would say our underwriting is like 2 to 3 weeks after a complete application, which is, in my experience, a lot faster than other banks. So that way, at least you know I've got a binding bank approval to buy this facility before your due diligence money goes hard in most cases. And if like putting myself in a buyer's shoes, that's what I would want, because I don't want to like lose $50,000 if it's like, oh, actually, did you know your credit score actually sucks and we're not approving you? And you're like, shoot, I just lost $50,000. Yep. So that's kind of my thing. Once the application's complete, I think you're 2 to 3 weeks away from a credit approval. Once your application is complete, you can close in 45 to 60 days. But keep in mind, the number one driver for on how quickly you can close is you.
Yep. So now they've got that application, everything done. You guys underwrite, you given it a green light. Is there any instances that comes back and it's like, oh no, we couldn't get the approval? How does, I mean, like, because doing it before, right, and I've done, I think a lot of people, they're scarred by that. That's a big thing.
So if they're not PLP lenders, once the internal credit committee approves it, then they have to ship the packet over to the SBA. If you're PLP lenders, your approval counts as the final approval. So you don't have to go out to anyone else.
They're not saying to the government. What is the time in a traditional banking process? Their committee approves it, they send it out. What is the outside the organization's time frame with the government? How does that just normally work?
It depends on how busy the processing center is. So it could be a couple of days, could be a week, could be a week and a half. I mean, and they may have some comments. So then they ship it right back to you, and then you have to provide answers to those comments, and then you send it back, and then you get right in line. So it's
you're working with another bank. You're underwriting. They're doing everything all over again. Everything else.
I heard recently it's like 4 days at the processing center. Like in the crazy times of 2022, it was like 3 weeks at the processing center. So that's something that can fluctuate based on the capacity they have and the volume that they're seeing.
And that's
so
obviously no questions or anything else like that. That's just
Yeah, so if you're working with a lender who doesn't have PLP status, with rates coming down, if you think there's going to be a lot more people asking for SBA loans, that processing time is probably going to go up, I would guess.
Yeah.
That makes sense. You guys are looking at today's environment. Rates are starting to go down. What are you seeing? Like, are you seeing more people get loans? Are you seeing acquisitions pick up? Like, what are you guys seeing out on the street right now?
I've got 3 acquisitions. Like, I'm so happy. Like, this would have been unheard of at the beginning of this year, but I have recently have gotten 3 acquisitions that actually cash flow. We're working on the applications. They're under contract. So to me, I'm happy. I love doing construction loans as well, but acquisitions are so much less complex. They're a lot, quicker to close. And so I think that's a really positive sign in the market that people are able to come to terms with sellers, because that was not happening for a long time.
And some of the stuff that I've seen this year is quite niche, really, because we're doing CO acquisitions of businesses that have just opened their doors for business, for lease up. And that is, I think, part and parcel of what happened back in 2022 and 2023 when the rates started going up. So if someone closed their construction loan early 2022, they had X rate. And then, by the time they were done with construction and they were starting to lease up, those rates could have doubled because of the Fed's increase in rates. So they burned through their interest reserves and operating capital, and now they're left with no funds. They don't want to take the risk of putting more money into the deal. So we've seen quite a few CO acquisitions this year. Big ones, all brand new facilities. And we don't shy away from those as long as the feasibility study indicates that, hey, this facility at this, at this pricing can do this, and it can hit all our DSCR requirements. We'll do those deals.
Now, when you're looking at the debt coverage ratio, how is that affecting how much you're seeing people needing to put down? Because with the SBA, obviously one of the huge advantages is you have to put less down, right? Because we are looking, and some people are having to put 45, 50% down with higher interest rates in a traditional, acquisition. So people are looking and saying, oh, well, I want to go down the SBA route because we can, obviously that's more beneficial. Your returns are higher. You get to take more capital, on and on and on. But because interest rates have gone up, has that changed how much they're needing to put down on average? And what does that look like today?
Yeah, so I would say a lot of people think SBA loans are great, 10% down. I think that they don't realize that 10% down doesn't work every time. We're not just going to do that because that's the minimum equity injection. It has to show that, the cash flow can support that leverage point. And that isn't always happening. So we'll always look at kind of if someone is interested in the maximum available leverage, we'll look to see what that is. Both with interest rates being higher, or maybe they didn't get it for a super favorable cap rate, they may need to put 15% down, 20% down. So it's really all about how good of a deal you're getting for what you're buying. And we're not just going to be beholden to, for an acquisition, what the seller has done. We can underwrite off of projections, which a lot of banks can't. They'll say, I need to be at a 115 on historical numbers or I'm not doing it, which is hard to do if you have something that's severely mismanaged that could be so great if you just make a few changes. So we can meet our underwriting targets on projections, but really we don't want to over leverage the deal. So we're really always trying to find something that's going to make sense, that's going to have a decent amount of profitability for the buyer, because people are in self-storage to make money. We don't want to get people I'm just going to get it. It's going to be worth more later and I want to sell it. Yeah. It has to cash flow for us to get you approved. It just has to.
You guys did a project, and this was really fascinating. We were going over today, where you actually did an SBA loan and a conventional one because the asset was $10 million. It was a conversion, right? It was conversion. And so the SBA loan covered the $5 million, right? And then you guys piggybacked that with a conventional. Will you talk about that structure and how you guys, because that was, I hadn't seen that.
Yeah. So it's called an SBA loan plus a pari passu loan. So it's basically a conventional loan that mirrors the structure and the terms of the SBA loan. So a 25-year, if the SBA loan has a 25-year amortization in term, so does the pari passu loan. It mirrors the interest rate, as well. And the SBA lets you do this as long as you keep it completely the same. And so we like to use that because the 7A program is so great for construction because you can, build something and include all that operating capital on a 25-year amortization. So we love that program. And it's a way to just kind of stretch the 7A program to get larger projects to fit. And it was a great fit for that project. It penciled really beautifully. that way. So that's kind of something that we do. And I think some other banks do pari passu loans as well, but it's not, there are a lot of SBA lenders that are just like $5 million is the max and that's all we're going to do.
Yeah. I mean, that was basically a $10 million loan and they put in 1.1 million and it was, I just had never seen that. It covered it the same. It was like two SBA loans almost on top of each other. When you get into this more, I'd say, creative, there's a lot of people that are going out and they are trying to get bank loans, but they're also finding owners that will carry some because there are lots of reasons why. But when you guys see that, how does that play into a role? Do you see any situation where you guys will work with carrying, that you will actually look at the seller and maybe as part equity going into it? Is that something you guys even would look at or entertain? Or is that just off the table?
Well, we like seller notes. Yeah, seller notes, if they come in a subordinate position to us, I think that improves the deal quite a bit. Now, the seller notes, when they're coming in a subordinate position, which means just a second lien to the bank's first lien, then that's reducing the exposure for the bank, right? So the bank's in a more secure position. The seller's at risk. And the sellers are willing to do this because they may provide a seller note that is on really good terms, so the cash flows of the facility improve, so it goes through banks underwriting fairly well. And the seller may get a higher valuation on those deals.
Yep.
Right, so that's a win-win for the seller, win-win for the borrower, win-win for the bank. The bank's less exposure, the borrower is getting decent cash flow from having a seller note on really good terms, and the seller's getting the higher valuation. Now, I usually tell people, if you are going in for a seller note, go ahead, go in and get those seller notes, but the seller note has to be on a better term than the bank note. It has to add value to you guys. Yeah. So I usually tell people, get a 3 to 5 year seller note, really competitive interest rate, really long amortization if it is on principal and interest payments. It can be on standby too. So there's various tools you can use in the seller notes, negotiation of the terms to help the deal. Yeah. So we really like seller notes.
If the seller is stuck on this purchase price, that's maybe a cap rate that's outside of what you want to pay. It's like, okay, I can get you that price, but you need to work with me a little bit. Will you take back, X amount of money and on these terms so we can still get it to pencil? So it's kind of a win-win. The seller does take on a little bit of risk by taking back that note versus being paid in full at closing. And not every seller is willing to do it. There's some sellers that really need that cash out and aren't willing to play ball. But for some, it's been a way to kind of make transactions happen, even with rates being higher than they've been.
Yeah. Like they're like, we want X price. And we're like, not only are you not going to get that from us, you're not going to get it from anybody because no banks are going to lend to that. So what we try to do is we say, here's a 3-offer strategy, right? So if I have to do just traditional bank, here's what we can do. You want 8 million, I can do 6. Now, if you're going to do a hybrid option, I can get you to 7. And if you were seller finance it at these terms and rates and everything, then I'll get you the 8 million. Yeah. And so exactly what they're talking about here is it's a way to bring sellers to the table where they're not sacrificing what they viewed as the value. So all of a sudden they're going, well, people are like, well, sellers won't take a second position. And I'm like, yeah, they will if it's an extra $1 million. Like if you're going to, why would you care? I'm not going to get it anyways. So, I see a lot of people in today's market that are doing that because you have sellers that sell that are opportunistic, meaning that, I'm going to get a high price. But then you have actual sellers, what I mean real estate, they have to sell for all the normal reasons that sellers have to sell. And we're in a market where that's the majority of people because the ones that are brought to the table because it's just stupid prices, that they're not getting it. So I love that aspect that I saw with you guys in creativity because we're actually seeing a lot of that right now where you're trying to work with a seller and they actually want to work with you. It is not send out an offer and, highest bid wins and they're all competing, right? We're not seeing that. But we like that 3-offer strategy and able to map that in with, can you do that with an SBA?
Yeah, you can use a seller note with an SBA.
I mean, that is, I think a lot of people aren't asking those questions to sellers. It's either it has to be this price or it's gone. I need an SBA loan, and they're not being proactive in negotiations with the seller. That actually lowers the risk for the bank. You guys are obviously more happy. It changes your DCR, changes the risk because of how much debt that you're holding, and the seller can get a better price. So it can really work out to be good for everyone.
And it also, if the seller is willing to take a second position lien, that shows that the seller believes in this project, believes in this facility. So that also plays into the narrative when the bank's underwriting it.
One thing I will say, I'm a stickler on this, and my whole community does it. I'm very creative, everything else, except personal guarantees to seller financing. To me, I'm like, that is off the table. I will never, ever, ever, ever do that, because I am protected from banks by the government, right? Whereas if it's a seller, I'm not. That's a civil thing. They could literally sue me for a whole bunch of reasons, try to call the note due, and then you're in lawsuits forever because the seller just wanted money or all sorts of reasons. They're not banks. Sellers are not banks. So I just want to put that disclaimer everybody out. Don't personally guarantee. That's why too, when you were talking about it has to be better terms than you could get with a bank, or why do it? I completely agree with that, because I get a partner and I get safety and all these other things with a bank. So I just have to put that disclaimer out, because that makes me nervous when people do seller financing and then they signed all these personal guarantees, everything else. I'm not a fan of that. I wouldn't do that. All right. So with that said here, moving forward, we're moving into 2025. What should people be looking at? They have their acquisition. They're looking at all their options. When we're looking at the landscape, a lot of people are looking at credit unions, local banks, maybe national banks. They're simply going, where do I go to get money? Like I need somebody to get a loan from. What are the pros and cons to not only the different types of banks, but also the loan product, as in SBA versus just a straight conventional? It's that two-layered thing. It's like the type of bank, right? Where is it? How's it function? And then the products on top of it. Where should people be looking at for options, and how should they navigate that?
The United States is large. Mm-hmm. There's not a consolidated lending effort to self-storage nationwide, other than I think Live Oak Bank. I think we are the only nationwide lenders out there.
I think so. I don't know one.
That can help people out in all parts of the country looking for self-storage deals. So I think there's going to be pockets of small regional banks that can play in the space, but sometimes they just don't understand self-storage.
Yeah.
So you have to be very careful again when you're approaching lenders. We've got a fairly educational approach to self-storage. We've been doing this since 2015, and with the SBA product, we've been helping people get into this industry from day one. That's been kind of our approach. So we've been helping people understand this industry, helping people get into it and have access to it, so they can build their portfolio. So I mean, we will go in and we'll work with people. We'll help them understand, what needs to happen so they can get into this space. And we'll work with them, help them, for example, like PSAs. Right? Mm-hmm. We've talked about it a little bit. When we take a look at people's PSAs, we'll let them know, hey, the bank will require X, Y, and Z documents from the seller prior to closing. Please have that included in your PSAs. So before you sign your PSA, make sure all this information is in there. So things like that. I mean, banks that know the industry.
And underwriting. This is a big one for people. Like this is, we've talked about this, and I mentioned it before, because of our deals that we bring in our community, we actually work with you guys before we even take it out or whatnot. We want you guys to look at it, and we want you guys to say, this is where we think the property could be or what we could do with it. And that is unique. I don't know a bank that I would do that with or no. So it's not just like on the PSA or the requirements that they need to get it done, but it's also on the actual underwriting of the property that you guys can be looking at and basically checking and benchmarking and say, you may be missing something here, looking, because this is, all you guys do and what you do. So when somebody's out trying to look at a potential property, they want to go under PSA. You mentioned you give them a list of documents, everything else. Talk about on that valuation side and underwriting, what are you wanting to see for you guys, like out of the market research and everything, so you can help them and they know what to provide to you that you need? What does that look like?
Yeah, so we're going to really dig into their projections. And so we want to see kind of what are they projecting out for the next 3 years for this facility. And we've seen so many projections for self-storage, so many financial, statements for self-storage. We can suss out realistic projections versus ones that are pie in the sky. Like if you are buying a really junky facility, you can't say, well, I'm going to match the facility across the street. Well, the facility across the street is a brand new climate controlled CubeSmart. That is not your comp. Or if they're saying I'm going to operate it at a 90% margin, you and I would know there's no way that you're operating, even if you don't have a manager, you can't operate it that
You don't have a 10% expense ratio.
No. And so it's really easy for us to kind of dig in there. And it's only easy for us because we're kind of one-trick ponies in that sense. Like if all you do is self-storage loans, you get really good at doing it. So I think that's one benefit that we have to our customers is like, I think this is a really good deal, but this is the biggest financial decision I'm making in my entire life. I kind of want to get the sense that somebody else thinks it's a good deal too. And so there are a lot of banks that just like, okay, get an appraisal, I'll lend you 75%. That isn't necessarily a good deal for you. So just kind of having that second set of eyes, or in your case, when you're looking at it, you like it, you send it to us, we like it. Then when you send it to your community, members, it's like, okay, it's not just like I want to buy self-storage and I think it works. Like other people have looked at this and vetted it for me.
The person that actually is going to write the paper.
Right.
Like, they said that they would like to write the paper. Obviously, that's a big difference.
And another thing that I want to point out, which may or may not be a big thing for people, but we are not commission lenders. So we are not going to push things through just for a big Christmas bonus. Yeah. We have that underwriting. We're shareholders in the bank. We don't want deals going bad, and then the share price is reflecting that. So we have, I think, the best interests are aligned here properly.
Yeah, and we really care about our customers. We've been in their shoes. Bishesh has invested in self-storage. I've bought self-storage facilities. So, like, I get it. And I get the anxiety that comes with, like, is this the best use of my money? Is this the right facility to buy? So to be kind of a guide in that process is something that we do not take lightly, and really want to provide a good service to our customers, because we've seen how transformative self-storage can be for customers. So we've been doing this since 2015. We've seen the full life cycle. We've seen people that have built it, grown the value, sold, and made way more money in self-storage than they could have ever made in their day jobs. And it's such a cool thing to see. So we really kind of get the whole process.
And I do want to point out that's a really important part, because there always seems to be a disconnect between the sales team and the underwriting team and the committee. And I have gotten burned on this. And I know if anyone's active in self-storage, you have too. So this is a common thing where the salespeople are trying to get deal volume. So they're just like, we'll do it. Yes, we'll do it. And then they're fighting with the underwriting department. No, let's make this work. Let's get this done. And then you're all the way down the process and it goes to the committee, and the committee's like, no. And they're like, oh, sorry, right? And I don't see that. I've never seen that with you guys, where there is this internal conflict. And it is all on the same team. We have one guiding purpose, one mission. And so it's that helping from that front end to the back end. And that is really important if you're a first-time investor. For me, because you are taking the sales people, that front end, at their word. So when they say, oh yeah, we can do it, you actually believe like they're the ones that approve it and that they can do it. That's not how it works. And you can get into trouble quick, because they're that generalist approach, it's kind of throwing spaghetti at a wall and see what sticks. In today's environment, that is really, really important, more than it ever has been, because people are not rubber stamping deals. They're not taking any risks that the bank doesn't want. And the bank's philosophy and what they're doing is changing. We had that happen. I was talking to you 2 years ago, where all of a sudden we went through the whole process, everything else, and the committee went, oh, interest rates rose up. So they're like, we're completely risk off. It doesn't matter the industry or anything. We're not doing construction loans. And we're like, we've been working with you for 6 months. We were just getting it done, right? And that is something that we don't worry with you guys. And I think that's really important. Okay, we won't take all your time. We're already but you have helped us with the educational stuff, guys. You can go on YouTube. You've also come into our communities at our conferences to help educate people, all on storage. Just this. Where can individuals go remember everybody, before they get a property to call you up. So don't call up, say, I've been under contract for 3 weeks, right? So how can people get a hold of you guys?
I mean, if you just Google Live Oak Bank self-storage loans, we have a special landing page on our website that has a ton of educational materials. It has a link to sign up for our office hours, and you can also click like connect me with a lender, and you can meet somebody to talk about kind of your situation and self-storage. So.
Now, don't be intimidated. I mean, it can be daunting taking, this big leap into this new industry, big, commercial mortgage. All those are daunting, things. But we do this on a day-to-day basis. We've helped plenty of people out who were probably in the same shoes as a lot of people are right now, thinking about a next self-storage deal, our first self-storage deal, thinking about loans. We've done this before, and we've done this for the past decade almost. So don't be hesitant. Give us a call, and we can definitely talk to you and guide you through this journey.
Awesome. And thank you for letting us and our team come down here and see the campus, be out here with you guys. We really appreciate it. We've worked with you guys for a long time, and our students have, and it has been an awesome opportunity, and your guys' customer service is just exceptional. And for especially people that are getting in, that intimidation part, that's real, right? It's nerve-wracking to call a bank. If you've never done this before, it can seem overwhelming, or you're going to get no, or it's getting in trouble. It is. It's daunting. And that's not how it works with you guys at all. It is literally, oh, we're working together, and I don't know this. That's okay. Let's figure this out. And that's why I think it's important to everybody, reach out before the project starts. It's going to help you out. It's going to save you so much trouble, and it'll make sure everything goes fluid and you're prepared, and that'll bring you confidence to actually close on the deal. So thank you guys for your help. Appreciate it. And guys, the links are in the bio or the down below. So check it out and appreciate it.